Hi everyone, Connor Woods here, market coach at Forex Signals and howtotrade.com, and welcome to our weekly preview. Last week, a deepening crash in the bond market sparked panic on Wall Street as the benchmark 10-year yields rose above 5% for the first time in 16 years. There were also mixed results from the Megatech earnings, with the only real bright spot coming from Microsoft. The central bank also decided to hold rates at 4.5%, which has set up a fascinating week 44 in the financial markets. This week, the Federal Reserve and the Bank of England will take the hot seat, with volatility promised with just the small matter of US Non-Farm Payrolls out on Friday. Let's break it down for you now. Okay, so the first market I want to look at is this NASDAQ market, which just took such a huge hit on Wednesday and Thursday of last week. Now, we mentioned last week about how, this low here was just so critical. We had, clear liquidity to the downside. We initially at the start of the week wicked and then started to trade higher. But then obviously the bears definitely took over. And what's probably more disturbing about this is I'm not really seeing any signs of RSI divergence. We're pretty much lower on all of these indicators as well, as we've made a new lower low. So let me just get rid of those, make this a little bit bigger. So really what we're now seeing is we're in the midst of a new bear market move, because we've mentioned this sort of price action that we've seen before, new lower lows, new lower highs, and where we are now, we've just printed a new lower low. So let me just put that as a break of low. So now really what we're looking for is we're looking for basically some sort of fib retracement that's in sort of maybe an imbalance area, maybe somewhere around this 14,600. Can't see how we go much further than that, to be honest, and that's the worrying thing. So really I'm looking for a reaction sort of around this area for the market to then, I think, continue to move to the downside with the mixed tech earnings and the chaos in the bond market and the slowing down of the economy. Next market to look at is cable, sterling versus the US dollar. So we have the Federal Reserve interest rate decision this week and also the Bank of England interest rate decision. So obviously there's going to probably be a lot of action on this pair. Now, it's quite clear to see the downtrend, all the way back from end of July this year. There's the downtrend we've been in, dollar strength coming through. Now, just showing signs that we're I would say a holding pattern here in this large area, but it's nothing that I've seen that's of any particular high volume. It looks to me like we're going to probably press down to these lows, and really what I'm looking for is depending on how hawkish the Federal Reserve are. If they do come out and they're really, really hawkish, then for me, I really would look to try and target this low here at 1.20, and I think 1.2 is probably likely to be tested in the next few weeks. If they come out and the Federal Reserve sort of dismiss the fact that maybe there's going to be another hike at the end by the end of this year, then we could see this market rally up a little bit higher, but I think it's a better play on the euro, but then we'd sort of be looking for the top side of this range to be taken out as well. So it's going to be interesting to see how that language is communicated in those interest rate decisions. And finally, I want to touch on the actual dollar index itself, because I think something really interesting from a technical standpoint is shaping up, and we can link that to the fundamentals as well. Here's the clear upward channel that we've seen again since the end of July. You can see the upward channel. This is the dollar performance. And I mentioned how we're just starting, and I said it in a couple of streams, that we're just starting to see signs of we're breaking out of this channel and maybe looking for another move lower. This could all be a fake out. There's absolutely no reason why it couldn't be. But the early signs are, if you think about the markets expecting another interest rate hike, I'm just thinking, well, if the Fed don't provide that hike, and we're getting towards the end of the year as well, I can only really see this being translated as dollar weakness, because so much has been priced in terms of, the market's expecting another hike. So from a fundamental standpoint and a technical standpoint, if the Fed underwhelms in terms of its hawkish message, then watch out for this to be a really clean breakout of this channel. And what we may see is the dollar index move back down towards maybe 105. Of course, if they do deliver that hike, again, can we see the dollar even higher? Potentially, but I would suspect that we may just start to see it range and sort of test maybe the highs at 107 as an upside target. Week 44 is stacked with high impact news events, with the US Non-Farm Payrolls event coming in the same week as the Federal Reserve and the Bank of England's interest rate decision. This is sure to cause significant volatility, and if you click that subscribe button or join our trading room, which there's a free trial, we will be all over the news events in our streams and the short videos as well. The key markets to watch this week will be the pound versus the US dollar, the NASDAQ and the dollar index. And if you are looking for a broker to serve your execution needs on these markets, then look no further than our partnering broker Switch Markets, who can help you get set up with your trading account. The link is in the description below. As always though, trade well, and we'll see you on our next live stream.